Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz as we get across what has transpired overnight on global markets. We'll engage global stocks rising to a record high after weak US jobs data boosted rate cut hopes, while on Wall Street, the S&P 500 and Nasdaq also closing at new records, with investors buoyed by a trade agreement between the US and Vietnam. Tech stocks led the gains, with Nvidia, Apple and Tesla doing the heavy lifting. Tesla shares rebounding, even as the EV maker posted a large drop in second quarter deliveries, but was seen a better than expected. The stock having shed around 20% this year. Chipmaker Intel's shares fell heavily on reports that its new chief executive is exploring a change to its contract manufacturing business. The big banks hit new records, with Morgan Stanley launching a $20 billion buyback, while others benefited from a hike in their dividends. Shares of the major apparel and sportswear makers rose after President Trump announced a new trade deal with Vietnam, where much of the manufacturing takes place. Centene shares, they plummeted to the lowest level in 8 years after the health insurer said it had withdrawn its 2025 earnings forecast after data showed a significant drop in expected revenue. Corona beer maker Constellation Brands, those shares slipped initially after reporting first quarter net sales and profit miss. And the copper miners gaining along with the price of the red metal, with US listed shares of BHP and Rio advancing. Well, the United States will place a lower than promised 20% tariff on many Vietnamese exports, with President Trump cooling tensions with its 10th largest trading partner days before the president could potentially lift levies on most imports on that July 9 deadline. The president wants to use tariffs to pay for his massive tax cut bill, and Republicans in the House of Representatives struggled to pass legislation as a handful of hardliners withheld their support over concerns about its cost. Meanwhile, in US data, private sector employment fell for the first time in more than 2 years in June, as economic uncertainty hampered hiring, falling by 33,000, whereas economists had forecast them rising by almost 100,000. US Treasury yields rose slightly, the 2-year at around 3.79%, the 10-year at 4.29%. While in the UK, British government bonds tumbled sharply after Chancellor Rachel Reeves backed down on welfare reforms, which reignited concerns over Britain's finances. The yield on the British 10-year government bond rose as much as 22 basis points to 4.68%. The US dollar rose against most major currencies as the jobs data supported market expectations of a Fed rate cut, the British pound weakening by almost 1%, and the Aussie climbing to 65.8 US cents. Bitcoin, that has surged overnight to close to 109,000 US dollars. Oil prices have jumped higher as Iran suspended cooperation with the UN nuclear watchdog, but a surprise build in US crude supplies did limit some of those price gains. Brent settling 3% higher at $69 a barrel. Copper was up almost 2.5%. Iron ore up close to 2% at $95 a tonne, and gold firming on rate cut hopes, spot gold at around $3,355 an ounce. Let's get more with a focus on US markets. Ira Epstein joining us again from Linn Associates. Welcome back, Ira. Good to see you. What do you make particularly focus on where the US economy is going at the moment? Big data this week focused on jobs. What did you make of that latest read on private sector employment?
Well, it doesn't match up with number one, the JOLTS report from the day before, and that's the amount of jobs that employers have put out there, which is 7.8 million or whatever. So that didn't work because you were up 400,000 jobs. Don't read a lot into the ADP numbers. Historically, there's a low, not a great correlation with the jobs report. I think you want to see what the jobs say. We know that the numbers keep falling. In other words, they're not 250,000 new jobs. They're not 200,000 anymore. They're not 180. They're coming down. It's the pace of coming down. And as they come down, what the Fed will look at is the unemployment rate. Right now, we seem to be stuck between 4.1 to 4.3. And until you come out of that, I don't think the Fed will act. But let's assume tomorrow you came out at 4.4. Well, I think you get the Fed really taking a hard look. I don't think they'd move in July. I think there's too much more data they want to see for the month of July with PPIs and CPIs. But you've got a wide open market that solidly believes that September will be the first month that you get it. And the reasons are, at that point, we will know what the tariffs are. They may be mandated by the president. They might be agreed to with the president. Nothing's under 10%. Vietnam, 20%. Nike jumps on that, other manufacturers, because they now know what they're dealing with on any of the goods that come out of there, and they get quite a bit of their goods out of that region. So that sets the tone for where it's at. Japan is fighting a big battle. They're not going to win. They're going to end up, if they're not careful, with 35% tariffs on their cars. And because the U.S. is such a big market for their cars, it's a problem. In all fairness to Japan, they are right about a lot of things. Most American cars that are built are not English drive. So we drive on the other side of the road. So our steering wheels are in the wrong place. Number two, we're gas guzzlers still. America is fully in love with the V8 engines. So they still go with that. That does not mean that you're not seeing the electric cars making inroads. They most certainly are making inroads, but not in the way that other parts of the world have done. So I'm looking at that. I'm looking and saying this tax bill will get passed in some part. I don't know which form the final will be, but regardless of that form, it's going to be inflationary. And with that inflationary part, I certainly like, as I said last time to you, the silver market. I still like the gold. The copper's been on a tear to the upside as there's been a squeeze play going on with that. And then is the dollar. I see no reason for it to lift yet. It could, but I don't see it.
So, Ira, the Fed has said it wants to wait and see the effects the tariff has on inflation. Does the same apply for jobs? Is there an expectation of where tariffs are right now that it is going to negatively affect the jobs market?
To a degree. Businesses will decide what the tariffs do, and the Fed will read what the businesses did. That's, I think, the best way that you can look at it. So as I look at it from that tone, as a businessman, I'm waiting. What are my tariffs going to be on the products I have to bring in? If I don't need products that I'm bringing in, if I'm primarily a domestic company, I'm hiring and doing what I have to, the way I have to do it. But if you're a retailer and a lot of your goods come from abroad, as many of the retail companies do in America, you want to pay attention to all that. So we're getting that. And again, this is all going to be known, maybe, fingers crossed, what the numbers are on July 9th, and we will then see how that hits the economy. And how it's going to hit the economy, the analysts will tell you, and the Fed will tell you. But because you're going to get a CPI, PPI report in July, you're going to get another one sitting there in August. The Fed then for September has two more reports under its belt. It's got jobs data galore. It's got tariffs that are known. The Fed has said, if you saw just in, where were they? In Portugal, I believe. He said that had it not been for tariffs, they would have been cutting already. So they spilled the beans. It's already known the Fed's going to cut. Now the question is the new data to just give them the cover to do so.
Meanwhile, Ira, Wall Street continues to hit new records. The S&P, the NASDAQ, those tech stocks are a real driver at this point. Given the weaker US dollar, is that likely to be supportive of earnings growth going forward, do you think?
Well, let's understand first, the US dollar falling is bullish for this. You can come in and convert your Aussie dollar and get a stock for cheaper than it was at the beginning of the year. It's really that simple. What is the Aussie up as an example against the dollar? Number two, known is the key word here, known in quotes. Once we know the tax spending bill, once the tariffs are known, tell me what else is out there. I mean, other than the war skirmishes that they're trying to put to bed between Israel and Gaza right now. Iran, for the moment, seems to be put away. It could flare up, but it's put away. And Ukraine, of course, is the last thing that has got to be resolved one way or the other. But the president's got Europe very involved in that. So the stock market looks at this. It then looks at some of the technicals. You know, yesterday you had in the S&P the golden cross. And if you go back and you study that, it's when the 50-day moving average crosses the 200. And the signal ends when it goes the other way. Well, if you go back and you look at how that's done, generally speaking, a year out, you're even higher than you were the day that happened, most of the time. Remember, past performance has limitations. If it always worked, I wouldn't be here talking to you, by the way. I'd be somewhere else.
Yeah.
So it doesn't do that, all right? And if you knew it worked every time, same for you. So it doesn't, but it works more times than not by a good margin. And that gives you another part to it. So I look at it, where else are you going to put your money? There's nothing wrong with getting 4.5%, 5% on yields, nothing at all, if you think inflation's not going to happen. Unfortunately, I think inflation will bury that. I think that because of the tax spending bill, that you're going to get inflation. The U.S. doesn't know how to control its spending. I think it's terrible. All right. If you could just say we shouldn't do this, I wouldn't do that. The problem is it's not politically what will keep you in office.
So at this point, Ira, do you want to be fully invested?
Yeah. How's that? Pretty much fully invested in different arenas.
Yeah. Not
in just the stock market. I'd want to own Bitcoin. I'd want to own metal markets. I've said that to you before. I want to own stocks. I don't know if you want to own stock indices anymore as much as selective stocks. I think you've got to be looking very hard at the Russell index. And the reason is it's the scraps. And once the other markets leave, as they've done in many cases, all we keep hearing is how many new all-time highs we're hitting. Where are the scraps that might have a play in them? So the Russell's starting to get people look at it. It's not going to be the leader, but it might be the area that you start looking at. It could outperform. That's something that I'm looking at. I don't know what to do with interest rates. It looks to me like it's going to have a hard time getting under 4% in the 10-year note, which keeps the housing market ugly. But you don't just pay up. You wait for the markets to come to you because you're buying expensive areas already. So you've got to turn now selective. This is not where the market was after April 7th. And if you look back at it, if you threw a dart at a board, you made money. Other than Intel, I guess. But if you did that, that's pretty much how the stocks work. And in the futures markets, anything in the financials went bazooka. They went crazy. Currencies against the dollar, especially. What's dollar down against the euro? 12, 13%. And I think it can hit 18, 20.
Ira, comprehensive. As usual, thanks for joining us from Linn Associates.
Thanks for having me.
Let's turn our attention to the local market when we're getting underway in just under 2 minutes. Looking for a mildly negative start. SPI futures off around 0.1%. Stay with us. We're going to get right across that in just a moment.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.